Hello, everyone, and welcome to the current state of search panel. My name is Justin Outsley. I'm a Chicago Booth student, class of 2024. We have a great group of panelists here going to discuss topics such as current trends and challenges in searching and where they're seeing room for optimism. I'm going to quickly introduce our moderator, Zach, who will introduce our panelists, and we'll get started. Please save your questions for the end. We will reserve around 10 minutes for questions. I will be stationed here at the front just to be efficient with our questions. If you don't mind coming to the front, and we'll have a line here for questions to ask our panelists in the final 10 minutes. Our moderator is Zach Duprey. He's the Director of Search Fund and Sponsor Finance at Professional Bank. Zach is Professional Bank's lead expert in search fund financing. He has led highly successful sponsor finance teams focused on leverage lending in the search fund asset class. He's developed the concept of a nationwide focus on financing search fund acquisitions and led the initiative to focus on the needs of this asset class. For the past 8 years, he's focused on this sector of the leverage lending market, working with dozens of searchers, operators, and CEOs, and has financed over 75 acquisitions, representing more than $350 million in transactional loan volume. At Professional Bank, Zach leads and directs a knowledgeable and experienced team that wants to be your search fund financing partner. Thank you, everyone. Zach, take it away.
Thank you, Justin. Good morning, everyone. Today, our panel is the current state of search. We have a panel of active searchers currently seeking their first acquisition through the ETA model. Our panel has 4 individuals that represent different models in the search fund community, and we're going to hear their thoughts and viewpoints on their ETA path. We'll be discussing what attracted them to the model and the investors they choose, what they're seeing in the market, how they're developing a thesis and their go-to-market strategy, and learn some of the insights and challenges that they can share from their experiences thus far. I'll briefly introduce the 4 panelists and then we'll get into it. To my left, we have Hereford Johnson. He graduated from Kellogg in 2022. He's based and raised in the Chicago area. He is a nationwide traditional searcher, and he searched part-time his last year of business school, but has been searching full-time for nearly 4 months. He started his career as a blue-collar warehouse associate before finishing undergrad. Prior to business school, he spent time working in consulting while founding a home cleaning business. Next would be Tarra Sharpe. She graduated from Kellogg in 2013. She's the founder and managing principal of JHMacon Capital. She is a Chicago-based nationwide light traditional searcher and has been searching for 21 months. Before searching, her career was in marketing, consulting, and growth stage startups. She holds a BBA from Baylor University with a major in marketing and an MBA from Kellogg with concentration in entrepreneurship and marketing. Next, we have Michelle Kime, a Chicago Booth graduate from 2021. Michelle is currently an entrepreneur in residence with NextGen Growth Partners, a lower middle market private equity fund based here in Chicago. Michelle spent 13 years building her career in supply chain operations in both lower middle market and Fortune 500 firms, and she's been searching for 1 year and focusing her efforts in the asset-light third-party logistics space. And last, we have Praveen Vaida. He's an operating partner and principal at Broadtree Partners, which is a Charlotte-based nationwide accelerator in the search fund community. Praveen holds an MS in Mechanical Engineering from New Mexico State University and an MBA from Chicago Booth. We're going to jump right into talking about some of the past experiences these individuals have had and what they believe good personality types and motivations are. Starting with Hereford. Hereford actually founded and started a business, and now he's choosing the ETA path to acquire an existing business. I'd love to hear your thoughts on this topic.
Sure, happy to start. I loved a lot about running a business. It was funny, just last night at a happy hour, I was speaking with another entrepreneur who had successfully grown from 0 to 10 million top line. And we were bonding over how we have the tools to do it again, and I was nowhere near successful at it. But it's really hard to go from 0 to your first million in a business. And when I thought about what I really loved about being an entrepreneur, and I wanted to be an entrepreneur full time, I knew I didn't want to do it in home cleaning, so that was one thing. And 2, I didn't want to start again from zero. And so this was a really unique cross-section where I could bring a lot of my values, leadership, and strategic thinking towards a business that's ready for growth and still continue down that path.
Thank you. And Michelle, I'd like to hear your thoughts on this as well, because you worked in really large enterprises, and now you're looking at smaller businesses in the 2 to 6 million EBITDA range.
Yeah, sure. I spent most of my career actually working in the lower middle market, and then I also spent a period of time working in larger firms. And I think coming to ETA, I'm bringing really a passion for leading people. I love Hereford's brand here, people first. I have a passion for giving people an opportunity to grow in a way that larger organizations don't always give everyday workers. And I think when you bring a personality into search, that's important when you're trying to bond with business owners and when you're trying to establish like a values-driven relationship with them. Business owners have lots of opportunity, lots of different sellers that they can go to, and some of them are going to have more money than a search fund entrepreneur. So you really want them to recognize the value that you bring as an individual who cares about people first.
Excellent.
To use Hereford's brand.
Now, in terms of raising your fund, Tarra, you've been searching the longest, 21 months, and you raised a fund during COVID. How's your experience been starting your search during COVID versus where you are today?
It's funny because I'm getting to meet a lot of my investors in person for the first time, which is great while I'm here. But I raised my fund in the summer of 2020. It was so different because at that point you weren't meeting anybody face to face. It was all through Zoom. So I did all of my fundraising calls through Zoom and raised my fund, and then started in 2021. I think the difference in the last year and a half has been a couple of things. I think one, owners obviously are now comfortable meeting in person, so that's been a big change from the beginning of 2021, because a lot of my owner conversations at first were over the phone or through Zoom, and so being able to fly or if I'm Chicago-based, so being able to meet an owner for coffee has just been much more effective, I think, in being able to build relationships and rapport. So that's been really great and been a pretty big change throughout the process, I would say.
And to contrast that, Hereford, you actually raised your fund while you were in school. You'd already been searching. How is that a little bit different than, say, during COVID on Zoom calls? Were you able to meet with your investors and really decide who you wanted in your cap table?
That's right. It was interesting because I started school during COVID, and so I had this hybrid capital raise where I was able to meet some folks in person, some virtually, and I like to tell people I was cursed with time because I came into business school and almost immediately knew I wanted to do search. It was a matter of deciding which model and how I wanted to go about it. And doing that virtually was fascinating because we weren't able to have events like these in person to really have that happen. I also searched virtually part-time in business school, which actually hasn't been too different compared to how I search today. There's preference to go in person and meet owners in person, go to conferences. But I think, I don't want to jump around topics too much, but as I spoke with a lot of searchers, because of COVID's nature, actually physically attending conferences consistently as a searcher isn't as efficient sometimes. And so it's really shifted, I think, how a searcher would have approached I'm using the word search a lot, their search, say in 2019, compared to today, one with technology, but two with just so many other options that you don't have to be in person, at least in those initial relationship touch points.
And Praveen, you went through the accelerator path instead of choosing individual investors or funds to be in your cap table. What led to that decision to go down that path?
So my background is I have worked for a big company like Michelle, right? Cummins, a multi-billion-dollar company in different roles, and I think my strength is in operating, and I do not have like a PE or investment banking background, so I was not sure about that process. And also, I do not have experience of closing the deals or executing the deals. So I wanted to partner with somebody who is strong, right? Which Broadtree has 3 GPs who help us with leading one of the, I guess, closing or execution of that. So I thought that would be a good partnership for me, where I can bring in my strength as an operator, working in different roles, and then where I can use Broadtree setup to go through the process.
And Michelle, similarly, I think you chose working with NextGen for somewhat similar reasons as opposed to building a traditional cap table.
Yeah, I almost could have written what Praveen just said. I have 13 years of operating experience and 0 private equity experience. Nor did I have really relationships with lenders or fully understand how to structure a deal that was going to work for me. So I had kind of the thought I can either go back and try and fill those gaps that I have, or I can partner with somebody who's already an expert in that space. So that's really what led me to partnering with NextGen.
Yeah, absolutely.
Mind if I share an interesting data point? Because I know there's a lot of folks in the room who are considering search and deciding which path that they want to go. I remember as I was exploring the different models, and this is a hat off to the incubator model, which I didn't go. As I interviewed searchers who went through different models, the persona that I kind of kept running into in the incubated approach was I'm not sure, I'm a working professional, or I'm not quite sure how to search, and I really want a thought partner. And for me, I was like, well, I think I could figure the searching bit out. I don't know if I really want I don't know if that's going to be the sole value that I want the incubator to provide, which they're terrific at it. They can get you up to speed really quickly. I think that was a limiting thought that I had, if I can be honest with myself. I think they offer a whole lot more from things that don't get echoed enough, which is some of them you can invest in some of your cohorts deals. There's less wrangling of wrangling the cattle when you finally find a deal under LOI. So I think it's a fascinating model that I don't think it's enough light, even though I'm very, very happy with the traditional one.
So speaking of that, I mean, Tarra, you've been a traditional searcher for nearly 2 years. I mean, how do you interact with your investors during that time?
I want you to stop saying the amount of time, because it's making me very, very stressed. I'm in the middle of a deal right now, and so I'm like, time, thinking about it. But I can tell you why I chose the model. Sorry to joke. I really loved the idea of being able to put together my team, and so I thought about the investors like that. And so to be able to put together a cap table of people who I was excited to talk with, who has shared values, so I kind of sussed that out in a lot of my investor calls, and people who, I would be excited to call when I'm an operator, right? Who I would be excited to have on my board was really important to me. So I like the traditional model because of that, for the ability to be able to build your team. And I had some work experience. I worked 7 years after Kellogg and then worked 5 years before, and so and was a consultant before. So I felt not super confident with structuring the process, but I like the idea of being able to structure my search and kind of own that and be able to also build like my intern team. So for me, it was the ability to be able to build the team, have more autonomy in the search is ultimately why I decided the traditional route. And then related to building that team, I wanted to build as diverse team as I could. So it was important to me to have a couple of classmates who were former operators on my cap table. It was important for me to have women represented, minorities, because I just see so much value and diversity in every part of my life. So I definitely wanted that represented in my cap table and the people I was working with too.
And so now they're in their cap table and you've evaluated deals. How do you bring in your investors throughout the deal process, and what is that like?
Sure. And I've got a couple in here, so you can tell me if I'm doing a good job of that. I don't think I've done this great, to be honest with you. I think throughout my search, updating my investors on the process of like, I've talked to this owner, I'm going to this conference. I would send like monthly emails, letting them know what I was doing, letting them know like the metrics, because that really helped me be accountable too. So I was great just kind of throughout the search. Once I got into deal mode, I really kind of put my head down and just like got all the data from the seller and was like constantly doing analysis. And I found it hard to kind of come up for air to reach out to my investors as much as I probably should. So, you know, if I could do it differently, I probably would keep that same cadence, you know, of monthly or even bi-weekly, even as I'm like early in the deal. It's just letting them know like how it's progressing, what's going on, what questions I have. And so, because I think I just got a little bit too focused on the deal, so I would do that differently if I had it all over to do again.
Great, and that's really up to you. As the traditional searcher, you're kind of defining how you want to engage. And
That's right.
I'd be curious from Praveen, is it different when you're within the accelerator? Is it a weekly touch point? Are you active with the team on an ongoing basis all the time?
Yeah, so I guess what works well for us is we have a daily stand-up where we are discussing about deals every day, and also there's a IC, right, so where we can quickly make a decision. And again, you know, the easier probably compared to the traditional is you have all the team on a schedule every week, every day, where you can get to a yes or no quickly, right, and do not have to worry about how do I get buy-in from maybe 5 or 10 people, right? I have 2 or 3 people, right, so where we can quickly get to an answer. So I think maybe a little more efficient from that standpoint.
And as it comes to, I guess, first evaluating deals, as you start looking for companies, are you doing that with the team as well? Or are you on your own in the way maybe some traditional searchers are in terms of thesis development and going to the market with your strategy?
Yeah, so I guess from the beginning, right, so that when there is a new thesis, we talk about, hey, you know, here are the campaigns that I'm thinking about. Here are the industries, why I like or why I want to go about, right? And then there is a quick feedback of, you know, we have looked at this in last cohort, and you know, here are the challenges, right? So think about this before going further, or maybe answer these questions. Sometimes, hey, our investors love this. Sometimes our investors do not like this, right? So you can come to a decision quickly.
Great. And how do you feel that's different, Hereford, in terms of, are you on your own kind of developing your thesis and just engaging with your investors when you do have opportunities?
I think every searcher is different. I was very intentional that I wanted a lot of interaction. I think when I was putting my team together, as Tarra was saying, I got the feedback, and it was good feedback from investors, that I interviewed them as much as they interviewed me. And so I was very specific in asking, where do you as an investor like to help the most? What really energizes you? And I really appreciated when investors would say, you know what, during your search, I'm no good. Like, you can call me, but like, I'm not that person. I have investors who are like, hey, and I'm willing to roll up my sleeves. You text me, I will make the time. I'll call you in an hour or a couple hours. We'll talk. And so it's during my different phases, I have different cohorts of folks that I can call on for various things. On an accountability standpoint, I think that's a terrific point. I chose a couple of investors early on to say, hey, every week I want to talk to you. Even if I got nothing to say, I just want to just update you on what I want to do next week, what I did this week, kind of as an accountability for myself early on, because that first month gets away really quickly from you. And so I have a nice mix where there's investors where we'll touch base every 60 days, and others I'll speak with every week or every other week, once a month.
I'm gonna add to that. I mean, I think that's one of the cool parts is you're building your cap table, and the traditional model is I try to think about what was each investor going to bring to the table, or how would I work with them. So I had some current operators in my cap table, as I mentioned, who I can go to for my dumb questions, who I could ask about how to engage with investors. I've got some folks who are operators but have exited, so can engage with them on, okay, talk to me about how you went about getting debt partners, or how you thought about growth capital or different things because they're so close to it. And then I've got more institutional investors who've been in this space for a while, who provide really just this benefit of being able to see a bunch of deals, right? And so they understand, oh yeah, I have so-and-so who is in that industry, you should talk to them. Or we looked at a deal like this, and here's some of the things that really made or break that deal. And so that's really something I think to think about, and that's really great about the traditional model, is you can kind of build this team thinking about the things that qualities you want, but also how in which you're going to engage them in the process, and then even when you become an operator as well.
One more thing. The reason I love the search community so much, I think it's easy to forget when you're you finally raise your capital, you're in your bubble, this is my team, to forget about everyone else. I could always do better, but I try my best to keep folks who aren't in my cap table or just people I've met throughout time just engaged, whether it's in a search or just in life, to say, hey, hope the kids are doing well. Just because you never know, this is really it's a growing community, but such a small community, and it's been helpful where there's been examples where I've asked my cap table, does anyone know anyone in this particular space? And it was crickets, and then I reached out to other folks and just, hey, catching up, by the way, do you know someone in this space? And they did. And so it's good to just keep that network going.
Great, and I want to pivot now to kind of talking about sourcing deals, working with business owners, trying to get deals to LOI. Michelle, how best do you recommend people use their time in terms of sourcing deals, the networking, actively going down the path of a thesis? How long do you spend there? Can you comment about that a bit?
Yeah, I think it depends on the thesis. It depends on the number of businesses that are in the space that I'm looking at, and just how excited I get about the deals that I'm able to source while I'm there. I've spent weeks in a thesis, and I've spent a year in another. So it really, the answer is the famous "it depends." I'm going to say that the areas in which I have had the most success and spent the most time are areas where I know that I can bring value and I can build kind of instant credibility with a seller. So, spending 13 years in supply chain, and I'm Apex CPIM certified. So when I put that in my email, and my email signature is, Michelle Kime CPIM, a business owner who's running a fulfillment center sees that and recognizes that I'm not just a financial buyer who wants to absorb their company into maybe a larger business. They see that I'm someone that's passionate about their space and can really relate to them. And then when I get on the phone with them, I can talk shop. So there's other spaces where I have spent months and not been able to talk to a single business owner because I can't find a way to build credibility, in my initial outreach. So I think that my suggestion would be find a space where you can add value, and then show the business owners up front how you can add that value.
I'm going to counter a little bit. I spend I think my motto to myself is to get away from the laptop as fast as you can when it comes to research. I think you're going to find out, yeah, for sure, go for your competitive advantage. I'm 100% behind that, especially if you have previous experience in the industry. But I find that the more I can get on the phone on the proprietary side with owners, the more I'm going to learn from any report or just building models or thinking through theses. I think the challenge you'll find a lot of searchers run into is it's really fun. Industry research is really fun and intellectually stimulating. But you end up doing a lot of research and finding out there's only so many targets, especially if you're geographically constrained. And so I find the thing I'm looking for is it high TAM? Is there a lot of players? Okay. What are the headwinds, tailwinds, general? Let's get on the phone and learn more. And then I'll eventually, through those conversations, you'll just get credibility from hearing, oh, spoke to 12 owners, they're all dealing with this problem, some are using this solution, how are you thinking about it? And that's how I build credibility, just from being a humble learner.
If I can just jump, I really love what you had to say about, you can spend so much time researching and then find that there's really no opportunity at the end. And this is a big learning for me. We have a great internship program set up at NGP, and so I'll have interns and I utilize them. And we go through tiers when establishing whether or not to create what we call a deep dive into an industry. So our process is I have interns every week come to the table with an industry that they pitch, and I tell them not to spend more than an hour doing research, because there are thousands of industries out there, and if you spent a day looking at each one, your search would be over and you haven't even spoken to a business owner. So you spend 1 hour, you get the top level most important data points about the industry, and then it's either a go or a no-go. And if it's a go, then we pursue further investigation into the industry, and we don't actually get on the phone until maybe 5 hours into the research. But I'm going to say only 2% of the industries that are brought to the table even get to the second stage. So we're really spending no more than 1 hour of research before we, say go or no go. And the number of targets in the space is one of the top items that we look at. If there's less than 400 businesses in the space, then we're not going to look at it, no matter how attractive the industry might look.
And Tarra, what has elicited the best results when you're targeting business owners? What has elicited the best results when you're targeting business owners, and how are those discussions gone for you?
I think it varies by industry, but I think generally what's worked really well is finding those connection points, I think, as everyone was saying. So, if you're able to communicate, when I've been able to communicate that, if I'm not in the industry, even just being able to say I was at this conference, or I spoke to this person, or I spent time on your website, and, this I connect with, I think those sorts of things are really important, because business owners get hit up all the time, and you'll hear it from them once you get on the phone with them, is like, oh, you're the 10th searcher, or you're the 50th blah, blah, blah that reached out to me. What's going on in this space? So it can be tough to break through, and I think especially if you're excited about the industry and the business, having your interns or you do the research on the companies to be able to dig a little bit deeper than just, oh, you were Inc. 5000 company, great, but being able to dig a bit deeper on who are their clients, or the type of people they serve, or the founder's story. I connected a lot with owners, just being able to talk about their background and how they went about founding their company. So things like that, I think, really break through.
So, Praveen, where do you find that searchers most commonly err in evaluating industries? When you're doing industry development in your thesis, what do you think the common mistakes are that you're seeing? Because you do have the institutional knowledge with Broadtree and the team as you begin looking at things.
Yeah. So I think, as Michelle was saying, right, so finding the right number of targets, I think it's until you go look into that, right, so you would not know whether there are the right amount of targets or not. And even if you have targets, there are some challenges in some of the industries, right, which became very hot recently. You can name like alarm monitoring or HVAC or a bunch of them, where there are attractive targets, but you may not be able to close a deal there because there are so many external factors that are working there, right? So I think it depends on that macro environment that is here. So those are, I guess, some of the challenges that we are seeing.
And so when you're targeting deals, Michelle, where are you finding some of the biggest challenges as it relates to competition? Is it from strategics and PE? Are you finding it from other search funds? Where are you seeing that?
Strategic-backed or PE-backed strategics, really. They're the that's the competition that's willing to pay more money than a search fund entrepreneur typically is, and they have the resources to really go out into the market and communicate with a lot of these sellers. So there's an attraction to some sellers that they can actually completely exit the business. They don't have to roll equity. They don't have to have any further involvement. They sell for a higher price, and so forth. So we really try to engage the business owner in like continued involvement through like rolling equity and getting a second bite of the apple, which can, you know, sometimes make up for some of the economic difference between us and the strategic private equity. I actually haven't come across any other searchers as I've been competing for deals. But I have spoken to business owners who sold to other searchers, you know, after the fact. I've reached out and they've emailed back like, I already sold to someone like you, you know, 3 months ago. It's like, that was just a little late.
I actually run into a lot of searchers, and it's fun in a way, because some of them are my classmates, some of them are, you know, whichever, and then we'll call each other. It's like, hey, did you see this deal? Did you talk to this owner? What do you think? And we'll just kind of collaborate on it. And sometimes we play nice. It's like, hey, you know what, man, you're a better fit. You go chase it and let me know what happens. So it's really interesting. I think the most fierce competition I've faced, and just because I'm having a rough time doesn't mean you shouldn't chase it, which is a big lesson learned in search so far, has been private equity, especially in the healthcare sectors, on the healthcare provider side specifically. I've had a lot of conversations, or maybe my first month of searching, with even just the local Chicago PE firms in the space, just collaborating, what are you seeing in the market, so on and so forth, multiples talk. And I usually ask, you know, how down market do you guys go in this particular niche? And in some spaces are going below 500K EBITDA and going up to, you know, their typical target range. And so when you're hearing that, it's just like, wow, I'm probably not going to play in this space unless I'm willing to live in the middle of nowhere where you guys aren't willing to go. So that's just food for thought.
And Michelle, are you seeing that competition at the lower end of the market with the PE-backed strategics, or is that more at a certain deal size threshold you're looking at?
Yeah, I'm going to say it's a certain deal size. I haven't come across any strategics or PE-backed lower than 2 million in EBITDA. But also, I'm going to say part of the reason why I'm not coming across a lot of searchers is because NextGen does specialize in a larger business than the traditional model does, right? We're looking in $2 to $7 million in EBITDA. So there's not a lot of traditional searchers out there in the market looking in that space.
Yeah, I would say same experience for us, right? Same as Michelle. I didn't see any competing searchers coming in for my deals. It's mostly PE-backed strategics, and you know, where we lose out mostly is all cash versus no structured deals. I think that's where we have second foot compared to the strategics that are coming in.
Got it. And in terms of deal size, is that similar? Are you all looking at deals 2 million to 7 million? Is it closer to 1 million to 5? Where are you guys targeting companies?
Yeah, pretty close to that. 5.
I think that's right, around that range. And I'd say if you're not running into a searcher, you found an amazing niche and that no one's thinking about, or just a growing number of traditional searchers is just pretty astounding. And everyone knows the popular spaces. HVAC was mentioned as an example, and a lot of folks are searching in those same ponds. So,
and given the amount of competition in the space, what are you seeing from like valuation expectations in the market? Tarra, you want to comment on that?
Yeah, I think it's much better now than what I saw last year in 2021. I felt like 2021 was really hot. And so, I mean, owners were, I was in the running and put, you know, IOIs for deals where I was getting like, they were getting bids of twice as much as what I could do, right? And I was on the high end, for my high end. So I think things have come down a bit for what I've been able to gather from talking with owners, I think this year. And, you know, I think that could be, you know, pending recession or just kind of the hot businesses went last year. There was a flurry of M&A activity last year, so it could just be the market kind of resetting. But I'm definitely seeing like more of the like 6 to 7 times, 5 to 7 times EBITDA is competitive, more competitive now than it was last year.
And how are you seeing macroeconomic trends impact either the sellers or even the targets you're looking at as it relates to inflation, rising interest rates, a pending recession? Hereford, do you want to comment a bit? Because I know you're kind of jumping right into your search during all of these factors.
Sure. I would say, economic signals aside, I think owners in general are becoming way more sophisticated. I think the days of bargain hunting, if they're not already behind us, might be pretty slim unless, again, you found a space that no one else is thinking about. They speak, owners speak with each other. These came out of a really hot market, so they're talking to their friends who sold for really crazy multiples, and what probably went for 6 times, or you could probably influence someone to anchor around 6 times. They have enough information to know that they're really worth at least 9. And what I've learned really quickly is to just pay a good price for a good business, and not try to, weasel your way into a great entry multiple, and just being honest. Say, hey, this is what market says. This is what I can pay. But I think the other part to answer your question, I think owners are also aware that they don't want to ride out another downturn. So you just recovered from COVID. A lot of them got a nice COVID bump in their numbers. 2022 might not have been as exciting financially for them as 2021 was, and they're hearing a lot of buzz in the market that multiples are coming down, so on and so forth. And so that's just another interesting data point I'll just leave it at that. It's an interesting data point.
Yeah, if I can just jump in, I really like what these two had to say. There are two challenges that I'm really coming across in the market. One is the COVID bump that Hereford just mentioned. A lot of these businesses, they believe that they can get 10 times on their business. Their EBITDA was 3 times greater than it ever was because of COVID, and they think someone's going to buy them off of their trailing 12 months. At those high multiples. So you get into a conversation, you build a relationship, suddenly, you recognize that the level that they're currently at is not sustainable. And so you need to somehow discount, use some type of model to discount their current EBITDA to what you think is going to be sustainable, right? Prices have been higher, inflation is definitely present. Every link, I'm looking in the supply chain space, every link in the supply chain, they have a 10% cost increase, so they're putting a 15% price increase to their customers to try and take advantage of that. And so they're not thinking that we're going to recognize that when they show us their financials. So when you come in and say, well, your $9 million EBITDA business really is a $5 million EBITDA business because of all these price increases. And yeah, I know Joe, your buddy, sold his business for 10 times last year, but interest rates are higher than they've ever been, and now that means that your business is worth 6 times, and that's a really difficult conversation to have with sellers, and typically it ends the conversation at that point.
One thing to just kind of add to bridge exactly what you guys were talking about is, I think you heard it in both of their comments, is the sellers are sophisticated in some ways, but sometimes they have unrealistic expectations, right? And so what I found throughout my process is helping bring some of the market insights to the conversation, and because they will say things like, well, so-and-so sold for $10 million, and then if you dig a little bit deeper, so-and-so's business was twice as big as theirs, and so had a higher EBITDA. So, there's conversations like that you have to have with sellers that I think no matter when you're searching, it will happen. But you may just be trying to kind of right size the conversation around different dynamics that have happened in the market that may impact their expectations around what their business is valued at. So it's just something to be thoughtful about as you're going through the process.
So the valuation expectations create challenges to get the deal and get it under LOI, but have you guys had dead deals you thought were going to close, you were expecting to be the CEO of a really exciting company, and the deal died? I want to hear some of those stories. Michelle? I know you have one.
Yeah, I actually have a good one, and this is a really good, if anybody here takes Brian and Mark's class, they always say trust but verify. So this is a really great example of that. This was a bank deal. It was a bank-led deal. Really great vertical into the alcohol branding market. It was advertised as a $6 million EBITDA business. And then after we got, we got pretty far down this road. We were getting ready to put an LOI in front of them. I'd gone out to visit, and we got some more detailed financials, and there was a line item like hidden in the income statement called pending sales. And what that was, and it was $3.7 million, so a non-insignificant amount of revenue. And ultimately what they were doing is their customers were giving them cash so that they could use that cash for their marketing expenses as opposed to billing. So they created a dummy invoice so they could collect the cash. And then that ended up showing up in their financials as sales. But at any point, that customer can call them back and say, I'd like my $1 million back, please. And there was also no costs associated with that $3.7 million. So it's 100% down to, the bottom line. And so here we are, like, pretty far in this process. And I call the banker and say, this is probably an issue. Can we get to the bottom of it? And that deal died. And really this is a pretty prominent banker in my local area, and now that kind of puts them into question as well, and I really am hesitant to even go to them for any other deals that may look attractive, because they're not fulfilling kind of their fiduciary duty to do the due diligence on their end before advertising a business. So and then when I called and said we weren't going to be able to go through, they never even called me back to say sorry, and here's some other deals that we have. So good lessons learned there.
So I think we have a few more minutes before opening to Q&A. I'd like to see if each of you could maybe provide a little bit of advice you would tell yourself looking at your search process, saying, when you're thinking about this, what did you wish you knew before you got into it that might have been helpful for the process you've had thus far? Maybe we'll start with Praveen.
I guess, think about getting to know quickly, right? If it is yes, that's good, but if there's you think it's going to be a no, right? You want to get to that quickly. And I do not know logical steps to get there, but again, that should be in the back of your mind all the time, right? So that's one. And the second one I would say is there are some attractive industries or segments, right, that we were talking about, but they are hot, and the probability of closing the deal in those segments is very less. So you might want to just ignore it, right? It would have been attractive maybe 2 or 3 years ago, may not be now. It might become attractive, but those are, I guess, a couple of suggestions I would say.
Yeah, I think the first thing that honestly came to mind is confidence. I think as a woman, I was nervous to go out to the market and put myself out there. And I wish if I could go back that I could show myself in the very beginning of my search as being a much more confident woman, and really not put the ideas in my own mind that somebody might reject me as a potential buyer because of that. I've really found that to be the opposite case, and for every business owner who hasn't answered the phone because I'm a woman, there have been business owners who have answered and said 70% of my workforce is female, and so I would love to talk to you about buying my business. So really, for anybody sitting in the room who's nervous, it's just be confident, right? Go out there and put yourself out there.
I think the thing that comes up for me is tracking what motivates me versus what kind of search says you should track. So for example, when I first started my search, I was tracking, open rates, response rates, and I think that's great, and I still do that now. But what I found is that wasn't super motivating throughout my search and doing more, going out more, talking to owners, things like that. What was really motivating for me was having owner conversations. And so when I would get off the phone with an owner, whether they chose to sell me their business or not, or were interested in not, I was always really excited and always really energized. So that kind of just was great because it put fuel back in the tank for me. And so I started to track owner conversation. I think Hereford, we've talked about this too. I started to track like what's my goal gonna be for number of owners I wanna talk with or industry experts I wanna talk with this week. So I think, as you think about tracking throughout your search, organize it in a way that you're gonna be motivated and energized from it. And it could be conversations, it could be, it could be coffees, it could be, metrics if you're built in that way. But for me, every day that I didn't close on a business felt like a failure. So I was like, this week I'm gonna be excited about talking to this many owners, and I know that's gonna get me there.
I'm going to share one I wish I would have known and one that I'm proud that I've been doing and sticking to. I wish I would have known when you're going through a banker or broker process and it's a sophisticated process, be ready to go to war. So you got to really, really, really know that space, have a really tight thesis, and ready to be able to kick some ass. Sorry, your other PE competitors. So that's been inspiring, and we're excited to go to war. One thing that I'm proud of is having fun with the search. As you speak with a lot of searchers, kind of when you're aspiring to be a searcher, you hear, oh, it's so lonely, and it's so, like, and in my mind, I was like, how could it be lonely? Like, look at the number of people. Here in Chicago, there's, I don't know how many searchers, but there's enough happy hours, there's enough people where you can just pick up the phone and call and talk to, where it doesn't have to be lonely. And I found a really good balance of, yes, I have my weekly KPIs for myself and my team, but I also make time to, spend time with my wife. I took an improv class at Second City, highly recommend it, just to get out and not mentally be on the search, because you can really you can think about it a lot.
I have a contrasting point to what Hereford said, right? So he was talking about the broker deals, how efficient you have to be, but for the proprietary deals, that's a very slow process, right? It might take months and months and months before you get the documents, build the financials the way you want to look at it, and then the SIM and everything, right? So that's a slow process. So I was surprised that it was so slow, right? Kind of going into that. So just be aware of that.
Thank you. And we're going to open up to questions from the audience. Justin has microphone, and he'll bring it over to you.
If you don't mind, can you come towards the aisle if you have a question, just to make sure it's efficient? Thank you.
Hi, this is Shubayu from Booth. I have two quick questions. One is, during the search process, what are the some of the KPIs that you track? And then secondly, when you're just putting your search fund, just to get investors on board, what are the top 3 things that you say is the most important to get the investors on board?
I can take the KPI question. So I tracked, as I mentioned, open rates for my emails. I tracked response rates and then conversion to meetings. So I did all that through HubSpot. And the thing that was a goal for me every week was the owner conversations.
We also track bounce rates of emails, so that we can see how many of our emails are actually hitting the inbox of our targets.
So our corporate team does help us a lot, right, at Broadtree on that, the email side of it. Personally, what I want to kind of look at is, have I submitted IOIs this week, last week? Are they kind of moving, right? So it's not, I don't have any number chart or anything, but I have something in the back of my mind. I haven't gone to IC for last 3 or 4 weeks, right? So, hey, I'm lacking, so I need to push. So that's my tracking with it.
Thank you very much. Oh, wow. Thank you very much. My name is Joseph. I'm from University of Pennsylvania. I have a quick question regarding the self-funded routes that for some of the projects, the Hereford, I think you mentioned before that there are some projects can be as low as $500,000, and those ones particularly I think can be self-funded. And what are the other alternative ways for you to finding LPs apart from getting from the traditional routes of the the finance? Are there any ways like getting EB-5 investor from foreign countries and the other alternative routes to make that achievable? Thank you.
So I'm aware there's a few funds that are specifically backing self-funded searchers, and they have structures where, hey, we'll be an independent sponsor for you. We'll pay, pretty much a traditional setup, a traditional searcher setup, but it'll be your independent sponsor. I'm not too familiar with too many of those funds. A lot of them are really new. So a lot of these structures, there's search fund credit. A lot of these things have like kind of emerged in the last couple months. So I haven't been tracking a whole lot of them. I'll just pause there. Does anyone have any specifics that they know?
Yeah, I mean, also never discount like an SBA loan, right? Like that's available to most people. You just have to get the business and yourself approved, and be willing to put your house up as collateral.
Yeah, personal guarantee.
My name's Joey Backwitz, and I'm a Kellogg MBA, and I graduated before 90% of you people were born, 1972. I've been a real estate developer for over 50 years, graduated in 72. I've done Walgreens, this and that. Long story short, I'm putting together land for self-storage, okay? In the course of that, I met a family, 3 generations, and they are in the trucking space. I'm putting space in there so I sound cool, okay? It's a 3-generation company. It's basic, and it makes over $2 million. I mean, you guys are looking for $2 million net operating income or EBITDA or whatever. It's got, I believe, a lot of potential in the world. So what I'm saying is that if you're looking for a company, a business with land and property and everything to go, and with somebody who wants to get out, I'm the guy.
I don't know how I can follow that up. So I guess opposite of that, I'm not an MBA student. I live in Michigan, and I've been in industry for a Fortune 50 company for 10 years. And this is my exit strategy. So excited to be here. Thank you. My question's pretty tactical. How do you approach owners in a way that gets them to respond? Like, is there a theme or a pattern? I have a few rental properties, speaking of real estate, and one of the worst things you can do to find a good deal is say, hey, are you willing to buy your house? There has to be some sort of art to your approach. So I'm not sure if you're willing to share those cold calling tips, but would love to hear them.
So I try to be very creative. I have a number of different strategies. First and foremost is that, build credibility in your very first touch point, right? Like in supply chain, I build that by my credentials. But in addition, I include a picture of me and my family in my initial email. I have a website. We created a commercial, and like my baby does like a cameo at the end. So like when I'll email it out and it's like, watch till the end, there's a surprise, right? And my 100% watch rate went way up, and people just love it. My website, michellewantsToBuyYourBusiness.com. That's what it actually is. So it really resonates with sellers. In addition to that, I've actually put meeting notices on people's calendars instead of cold calling. So just like a 15-minute meeting back to back. And then I send postcards, like they have my picture on them, and I handwrite a note. Really, really big on the handwriting, something, and not just like, hey, I'd love to chat, but something like, congratulations on celebrating 15 years in business. Or like, I've spent 13 years in supply chain, I would love to talk to you about, transitioning your fulfillment center or something like that, to put that personal touch. Cold calling, like actually picking up the phone, I found to be fruitless, and frankly, business owners don't even like it. They're really annoyed. So it kind of has the opposite effect that it might have had a decade ago. But yeah, just be as creative as you can. And also, you want them to see your name at least 6 to 7 times. and you want them to see it in different mediums. So that's why I link in with every prospect, not because I expect them to actually accept, but because I want them to see my name. They get the email, they get the postcard, right? So that I get recognized in their brain as a real person who's interested in speaking with them.
Yeah, I think the multi-channel is really important. I think phone calls were hard during COVID because a lot of people weren't in their office and they didn't think to patch their phone over to their cell, or they weren't answering. So I also found I would do a lot of cold calls and I just wasn't getting great response. So I've kind of nixed that from my plan, unless I really love the business and I'm seeing some traction. But I think, yeah, the multi-channel, so, because people get tons of emails, so I send direct mail, I do LinkedIn, I've sent chocolates before, so just whatever you could do to be creative, I think is important. And I think what I find is just the most, and it sounds simple, but having a sense of their industry and their company, right? And saying something about, I can't say that enough, but having done the research, even if your interns just write a couple, sentences about the organization, that really helps because they see that you've done some work before you reached out to them, and you have a reason why you want to buy their company, and it's not just, oh, you're in this industry that's growing 10%, that has 400 or more targets, that's a 2+ whatever EBITDA company. It's just, I find that hasn't been as effective. So as personal as you can get, to me, has been the thing that wins people over.
As you get ready to exit, you can come intern with me and you'll see all the ad copy.
Just one more question.
Okay, so I'm Juwan Sims. I'm an outgoing program manager from Meta, formerly known as Facebook. So I'm coming here to you with a more holistic question from a different path because I'm a tech guy. But I want to know, why did you choose to launch a search fund compared to pursuing another entrepreneurial path or a more traditional post-MBA career? And I know we're short on time, so whoever has or ready or is prepared is fine.
Yeah, sure. So after MBA, I did go work traditional route. So I was a consultant for 5 years at McKinsey, and then I went to work for a startup for 2 years. And so I chose to launch this search fund, especially after the startup, over launching a startup, because I realized what I was really good at was kind of taking the pieces of something that exists, similar to my consulting background, but taking the pieces of a business and figuring out how to make it better, and that's what I did at the startup. And so I really loved that phase of a business, of being able to think about how do you scale it. I'm not the entrepreneur that's great at the creating something from scratch. That's just not how I'm wired. So for me, it was the ability to be able to take my operator hat and my entrepreneur hat and really, take the pieces of a business and figure out how to make it better. And that was the ETA route versus starting something from scratch.
Excellent. We'd like to thank the Polsky Center, Chicago Booth-Kellogg, and our panel, Hereford Johnson, Tarra, Sharpe, Michelle Kime, and Praveen Vaida. Everyone, thank you very much.